Hey folks, it's Vic Noble here with your weekly trade example for the week ending July the 26th of 2013. And I thought this week I just address something that I get questions on a little bit here, and that is that a lot of people seem to be a little bit unsure of whether they should be buying or selling or what they should be doing based on price action that's happening. And in a nutshell, you want to be trying to take your trades in alignment with the trend bias, the daily trend bias, and we use a daily trend bias in the recurring forex patterns course in the coach's corner. And one thing you can do that's very simple that from Josh Lukeman's book, The Market Maker's Edge, is just simply use an 8-period exponential moving average on your daily chart and just follow that, and it's actually very, very effective. But there's even better ways to do it. But the the thing is with it is when you're trading against the trend. And listen, I got to tell you right now, I do take counter trend trades. There's some very, very effective counter trend trading techniques actually. That in fact we have some of our patterns in the RFP course do take those kind of trades, and you can get really nice reward risks on them. But when you trade counter trend, you better be right on top of your risk management and your trade management especially. But the easy way to do it is to keep your trading in alignment with the higher time frame trend bias. It just makes your life that much easier. One of our members, Matthew, for example, on Monday took this trade in here, and this is a pattern 6 in the recurring forex patterns course. It just was rallying up. He bought this dip back to support in here, and got a really nice profit. I mean, it's just trying to sell this kind of stuff and take money on the way down is difficult. And don't try to just get into stuff like that at this point, especially if you're not. I mean, if you're really experienced at it and you're really good at doing things like that, go for it. But you want the easy money. It's riding the trend. And on that, I'll just show you that trade actually on the smaller time frame 15-minute chart. Where was it? It was right in here. He bought right down in here, and one of the things that we show in the coach's corner is on when price retraces like this after a move up, and this is on the hourly chart. We saw that this was that pattern 6 on the way down. There's lots of wave action on the way down here that is a really, really good clue about exactly where you want to get in, no matter what your trading approach is, how you like to trade. They're extremely effective. So and then taking your profits is equally important. You want to make sure that you have a good reward to risk. You got 3-to-1 reward to risk out of this, so that's really good. I mean, there's you'll do really well taking those kind of trades. Today I'll just show you on the, it's I'll show you in the daily chart here first. This is on the euro US dollar. We've come up to a level here on the euro US dollar that's a 79% retracement from this high back on, what was that, the 18th of June, down to the low on the 9th of July. It's come up 79%. I've got this level marked off. I watch these. I think they're important. They do matter, and in my experience anyway. It used to be, it's an important level, as you can just, I mean, it's not me that says it is, it's the price that says it is. That's resistance, it's support, it's resistance, and so on. And I'm just interested in seeing what the price action is when it gets up here. It may or may not mean anything. It might blow right through it. I wouldn't start selling it just because it's here. However, if a pattern sets up that is one of our recognizable patterns, I may certainly take that trade, but I'll manage it very, very carefully. And that trade actually did set up here. There was a pattern 5, which is our negative divergence trade, where we had price actually going higher here, and then but the MACD was heading down, and it qualified, and so it was a good sell up in this level, and there was pips available. But notice how it came bouncing back up. These trends just generally, they don't give up easy. That with the trend trade today was a pattern number 4 trade right here, and one of our members sent in this trade to me today as well, where he got in down here and wrote it up as well. And that's a trade that you're taking now. It's with the daily trend bias, which is still up. And listen, until it's proven otherwise, be careful about fighting the trend and going counter trend. Okay. And as I said earlier, if you do go counter trend, wait till you get some experience before you start doing stuff like that. And also really be right on top of your trade management. It's really important. Get the risk out of it, get some profit, fund the trade, get it funded, and then you have a free look at it, and that's always a good thing. Okay, so I'll just leave it at that. I just wanted to make that point that if you're ever unsure about the best way to trade, find a trade that uses a pattern or a setup or whatever way that you're trading that is in alignment with the daily trend bias, and be very careful about going the other way until price actually proves to you that it's turning over. And you'll see it on the hourly chart. It'll start to make lower highs and lower lows. The candlestick action will be negative, and you'll get setups that you might recognize, whether they're recurring forex patterns setups or whatever else you're trading. That's fine, but the point I'm making here is don't be in too big of a hurry to go the other way on things until price really proves it to you. Okay, so leave it at that. Just a simple little lesson here this week that hope was effective for you. And we'll see you then next week with another weekly trade example. Thanks so much.